Hello and welcome to another Switzer update. And it's a really important day for interest rates, with the US Federal Reserve deciding to raise their official cash rate up by 0.25%. That's what the market expected. But the big consideration was what the Federal Reserve Chairman was going to say. Would that help or hurt the stock market? Now, before then, a local story is a really important one, which is important for our interest rates. And that's the fact that 800,000 or more households will go over a mortgage cliff later this year. Some will be in June or July, others will be in October, November. Now, we're talking about $350 billion worth of loans. And our cash rate was 0.1% in April, and it's now 3.1%, 8 raises in a row, which has resulted in a lot of people under pressure. Someone with a $600,000 loan is now paying $10,000 a year more because of those interest rate rises. Someone with a $1.2 million home loan is paying $20,000 more. Now, 20% of borrowers have told Finder that they've borrowed too much. 34% say they're struggling to pay, and 13% have actually missed a payment. And next week, they can expect another 0.25% rise in the cash rate when our Reserve Bank meets. Now, both the RBA and the Fed are determined to force inflation down, and they're using interest rates to do it. The RBA says that we shouldn't go into recession. The US is not so certain that they'll avoid a recession. In fact, many commentators say they think the Fed wants a bit of a recession to really get inflation down. Now, remember, 2/3 of Aussies don't actually have a home loan, and these are the people who are still spending. Some of them will be renting, and they'll be starting to feel the pinch as rents go up because of interest rates. But at the moment, the maximum hit from all those interest rate rises have not actually come through. They will later this year, and I think that will stop the Reserve Bank raising 4 more times, as some experts have been predicting recently. I think 2 more is more likely. Then our economic data will show that this economy of ours is slowing down, and they won't have to go as far as some people expected in terms of interest rate rises. Now, interestingly, the Dow Jones was down 400 points when the interest rate decision came through, but it ended up 6. NASDAQ ended up 2%. Now, all this sort of makes me think that the Federal Reserve's press conference actually gave a feeling to the market that the Fed is not going to be too aggressive with interest rates. They will probably keep raising, but they're going to watch the economic data coming through, and that economic data is not as strong as some people expected. The Fed may well stop raising interest rates, and that's why the stock market went up today. From my point of view, the fact that the Fed has not spooked the stock market today makes me be even more sure that 2023 is going to be a good time to be in the stock market. So from my point of view, and for a lot of my financial planning clients, it's time that we start investing the cash, even though there could be a sell-off in the short term. In the long term, this is going to be a good day for the stock market going forward. That's my update for today. Talk to you tomorrow.